Most people don't lose money in investing because of the market, they lose money because of their own mistakes. If you're trying to build wealth, there are a few common traps you absolutely must avoid. The first, investing without a plan. Too many people throw money into crypto, stocks, or mutual funds just because it's trending or someone on social media said it's going to the moon. That's not a strategy, that's gambling. Before you invest a single dollar, ask yourself, what's my goal? Am I investing for long-term growth, passive income, or a quick flip? Your time horizon and risk tolerance matter. Second, not understanding what you invest in. Warren Buffett said it best. Never invest in a business you cannot understand. If you don't know how a company makes money or what a crypto token actually does, you have no business putting your hard-earned cash into it. Third, trying to time the market. Beginners often panic sell during dips and FOMO buy during peaks. This emotional roller coaster is a fast track to losses. The smart move: stay consistent, dollar cost average, and zoom out. Fourth, ignoring fees, taxes, and hidden costs. You might be making 8–10% returns, but losing 3–4% to high management fees or paying short-term capital gains taxes because you sold too early. These little things quietly eat into your profits. And fifth, and maybe the biggest mistake, is not starting early. The most powerful force in investing isn't timing the market, it's time in the market. Compounding only works if you give it time to grow. You don't need to be perfect. You don't need to start big. You just need to start, stay disciplined, and learn as you go. Avoid these mistakes, and you'll already be ahead of most investors. Drop a brew in the comments if you've made any of these mistakes before, and a brew if you're ready to invest smarter going forward. Follow for more real-world investing tips, without the hype, without the noise,